People are concerned these days that their tax bill might be higher than it was in previous years, or that their children might have to pay more taxes than they would have if they had passed away in previous years. There are various proposals out there right now that are seeking to reduce the estate and gift tax exemption to pre-Tax Cuts and Jobs Act levels, with some inflation adjustments in there. And there are also a couple of other quirky changes that these proposals are seeking to make with regard to some grantor trust rules, but that's a pretty complex area of law, and don't want to get too far into speculating as to what's actually going to happen, because no one really knows. But ultimately, people are concerned that their tax bill is going to be higher than it otherwise would have been. Let's say that you're a widow or a widower and the exemption's already reduced back down to some lower figure, 5 million, 6 million, whatever that may be. If you didn't file an estate tax return for your predeceased spouse, you may have left some of his or her exemption on the table. And so if you're concerned that you don't have enough exemption when you pass away and that your kids or grandkids may end up having to pay more tax, there is probably an opportunity for you to still go back and file that return and pick up whatever exemption was left on the table by your predeceased spouse and use it for your estate, okay? And there are a couple of avenues to do it, but if it's still within 2 years of the date of death, you may still just be able to file it under a revenue procedure. But if you're outside of that 2-year window, then you can ask the IRS for a private letter ruling. And I've done that for plenty of clients and have had great success in getting those private letter rulings, which allow us to file a late return and still, reduce taxes at the end of it.